Hey everybody, what's going on? James Daniel here to help you make buying a home in San Pedro, California simple. And today we're going to go over where to find money for a down payment, especially if you're trying to buy in Los Angeles, California, more specifically San Pedro. This can be one of the most daunting tasks when you decide to buy a home. Unless you already have a home and you're selling that and using some of the equity to buy your new home, you have already saved up a large amount of money, or maybe you're getting money from wherever it might be, you inherited it, you got a gift, whatever angle that came from. For the majority of us, it's going to take a longer period of time to save up for a down payment. It took me about 3 years, 2.5, 3 years to save up for a down payment once I understood that, hey, I want to buy a home. At that time I was living in New York and wanted to come back to California. I was like, I want to buy a home in California. So definitely took some time to be able to save up for that amount of money while I was working on my credit at the same time. So if you're on this journey, do not get discouraged. Just have a plan. And I hope the things I go over today not only gives you an idea of how to plan, but even some ideas of where to be able to get this money from. If you have some of these means where you have this money, you're just like, hey, I never thought about that. So I think that at this point, you already have an understanding of how much you can afford per month. And then you kind of work backwards to see, okay, I can afford X per month. That equals to this overall amount of home that I can purchase. And then you can, from there, understand how much you're going to be able to need for a down payment. So the next thing I want to go over before we go in some of the ways of where to find money for a down payment are just the kind of the 3 most common types of loans. So you can see how much or around how much of percent of down payment you're going to need for that overall house. And then you can kind of plan out from there of different ways to get it done. So let's go ahead and get into some of the most common loans that you might get into, whether you're a first-time home buyer or you're buying your second home or wherever you're at in this journey. So let's go ahead and check it out. On here, the most common types, is I think as a first-time home buyer, you're probably falling in one of these 3 different types of loans. If you're an investor, you may use these. You may use some non-conforming loans. If you're buying your second home, it may be one of these. It's probably going to be one of these. So I just want to go over these and really stick to a high level of how much you need for a down payment. These type of loans have some other requirements, some other descriptions, but we're really going to stick to in this video, because we're talking about where to find money for a down payment, on just the down payment details for each of these different type of loans. So here we have the conventional loan, we have the FHA loan, and we have the VA loan. And I'm going to go over a little detail of these as we go through, but let's go ahead and start with the conventional loan. So with the conventional loan, you're able to put as low as 3% down, depending on your credit score and if you're a first-time home buyer. So make sure you work with your lender to see where you fall in that, and if you're able to put as low as 3% down based on the information that they need from you to be able to see if that works for you. But remember that if you put down 3%, your monthly payment is going to be higher. So you want to figure out, how much you can afford to put down, and does that amount of money work with the amount of month that you can afford to pay per month? So definitely a piece of the math you're going to have to do when you're trying to figure out, how much money you need to put down to figure out that monthly payment amount that you need. With conventional, if you put down less than 20%, you will have PMI, which is a mortgage insurance. And this mortgage insurance will not fall off unless you have a certain amount of equity within your home or over a time period. So speak with your lender, make sure you have a clear understanding of when you can get rid of this, and make sure you bake that into your monthly payment amount, because that will be in there until it's able to fall off for one of those 2 things. The next thing would be your minimum credit score needs to be 620, and your debt to income ratio needs to be 43%. Now, if you're like, James, what's your debt to income ratio? I have that there at the bottom. A debt to income ratio compares a monthly debt to person's monthly debt to their gross monthly income. So this is what the lenders are looking at when they are offering you a loan, and depending on how much they can give you in a loan, obviously depends on your debt to income ratio as well. The next would be your FHA loan. So this is one of the 2 government-backed loans that we have on the slide here. So basically, if you cannot pay for that loan, the government is saying, hey, I am going to back this person if they, do default in their loan. But with this loan, it's usually helpful for a lot of first-time home buyers, especially because of the low amount of down payment and low credit score you need. So as you see here, minimum of 580 credit score to put 3.5% down. If you have a 500 credit score, you have to pay a minimum of 10%, minimum of 10% down. And PMI still applies on this as it does the conventional because you are putting lower than that 20% down. And the debt to income ratio is higher here. So 55 to 57%. And this may vary between lenders. So definitely something that you're going to want to check out when you are working with your lender to figure out more about the FHA loan and if that works for you. And then the last type would be the VA loan. Now, this is a government-backed loan as well, as I mentioned, but for those who were in the military and anyone who's watching this that was in the military or is in the military, thank you for your service. And with this loan, 100% financing, so zero down, no money out of your pocket. But once again, as I told you, if you're putting less money you're putting down, the higher your monthly payment is going to be. So definitely numbers that you're going to want to figure out, with your lender or before you meet with the lender to see if that monthly payment amount works for you. And you are able to put money down when using a VA loan, but as you can see, that 100% financing option is there for you as well. Debt to income ratio less than 41%. So pretty between all of them, probably the lowest debt to income ratio as you can see there. So definitely have a few different options, depending, if you're in the military, obviously you have 3, but if you're not, you have those 2 there as you're kind of starting off, or some of the most common ones starting off. So now that we kind of understand, where we're going to need to be as far as how much needs your down payment. So it could be anywhere from 3%, it could be 20% or even more. Now let's get into a few different ways of where to find money for a down payment, if that's where you're looking right now. So now let's get into a few different ways to find money for a down payment. The first one I'm going to go over is home buying assistance programs. So one of the home buying assistance programs comes from CalHFA, and in your state, county, or maybe even city, they may have different down payment assistance programs. I'm just going with CalHFA, which is a California Housing Finance Agency, which covers obviously the full state, and one that you can kind of go on, and anybody living in California who's watching this video will have the opportunity to be able to go ahead and check this out if this might fit for you. But just going over these 2 today as far as California home buying assistance programs, wherever you're at, I would challenge you to go online and talk to your lenders and see what might be available for you. But we'll go over these 2 today. So within CalHFA has different loans to be able to help you if you're looking to purchase your first home. So within these 2 I have on the screen, obviously, like I spoke about before, an FHA, a conventional loan. CalHFA has an FHA, a conventional loan option. And to be able to help you with your down payment or even closing costs, they have what is called a My Home Assistance Program. And through this program, you're able to get what's called a silent second loan, or another loan that's able to help you with down payment or closing costs. So if you were thinking of using an FHA loan, say you went through the process with them, and FHA is where you landed at with you and your lender, you're able to get a deferred payment junior loan for the amount up to the lesser of 3.5% of purchase price or appraised value to assist with a down payment or closing costs. In this video, you would be using this for a down payment. Now, if you were using a conventional loan, you'd be able to have that deferred junior loan, the lesser of 3% over the appraised value. So definitely some options here with CalHFA that can help you be able to get some money as far as to help you get into a house, right? So some of the requirements here that I have up on the screen. So when you are thinking about getting this loan or getting this junior loan, it needs to be owner occupied. You can't use this money to buy a rental property. You need to be living in this property and go from there. I even saw, it has to be a single family home, condos that are approved for these type of loans, for like FHA loans or CalHFA loans. So you will definitely need to work with your agent to make sure if you have this type of loan, it does work for, say, if you're going to a condo, if it will work. For credit scores, 640 minimum for FHA, 680 minimum for conventional. The income limits. So every county will have different income limits. For Los Angeles, our income limit is $194,000 for, like as I mentioned before, only for first-time home buyers. Can be used for down payment or closing costs, and that's it. It cannot be used as credit for different repairs or money that you want to get back. It has to be used for two of those two things. As I mentioned before, there is simple interest of 1% on this loan, and the way to be able to get out of this would be you refinance. So say for instance you get to this loan, you have this 1%, but then interest rates go down, you refinance your whole loan into that new rate, so you're then essentially getting rid of this 1%. You sell the home, or end of your 30-year term. So those would be the different ways to get out of it, and then those are just some of the details about this. So if you are thinking about using a first-time home buying program, I definitely recommend that you go onto CalHafa's website, check out some of the different ones they have there. They have other options, not just ones that will get you money for a down payment. And I suggest you speak to your lender. Wherever you are, state, county, city, speak to your lender and see what's available for you. There may be a program specifically for where you live that can be able to help you out, get closer to your journey of buying a home. So up next would be a gift. So if you happen to have, we'll call it a family member. So say, you're looking to buy a house and your parents want to help you out. So mom and dad would be able to give you money to do that. So with a gift, as you see up here on the screen, gifts up to $14,000 per year per person can be given without beginning gift tax. So as long as you're staying under that, you do not have to pay taxes. Anything over that, you will have to pay taxes on. So you can get it $14,000 for mom, $14,000 for dad, whoever else that might be, but $14,000 will be able to come to you untaxed. Also stated here, like I said in the screen, documentation is required. You're going to need a letter saying that the money is intended to be a gift for buying a home and is not expected to be paid back. So definitely a requirement there that you're going to need to show, I'm guessing for your CPA, when it does come time for you to be able to show, hey, this was just gift money to buy this home. So if you have the availability of getting money through a family member or someone else, this could be a great option. I'd suggest that you go to them, lay out the plan, and show them what the money is for. It's almost like a business, right? That you're going in and you're asking, hey, I'm buying this business for this amount of time. Here's how much appreciation, almost like a little sales story that you're going to have for them. So definitely able to get money as a gift for a down payment, but so it's not taxed, you're going to want to make sure you're staying under that $14,000 per person per year, and you should be okay. So up next, let's go into retirement accounts. These may be things like your 401k, your IRA, or your Roth IRA, things that you obviously have been putting money into for a long period of time, and that you now maybe potentially want to use some of this money to buy a home. So let's look over at the slide here and see some of the details if you're thinking about doing so for each of these different options. So to borrow for your 401k, you're allowed to borrow up to 50% of your vested balance or $50,000. So whatever is less. So $50,000 is probably the max you're able to get out to it. Obviously, here in California, you're going to need some more than that to put down a down payment. I mean, maybe if you're putting less in for a less expensive home, that may cover everything, but that could help with some of that. The loan must be repaid within 5 years, but if you leave your job, you may have to repay the entire loan. So definitely something to check about with your company and the provider that has your 401k if you're able to take a loan and the details of that. But I think this one may be pretty standard. So if you are thinking about quitting your job, this may not be the right process for you. But if you're feeling like, hey, I need this money, I'm going to be here for a while, this may work out. There are no taxes or penalties on the loan itself if repaid, but interest will occur. And then to withdraw it altogether, so the first part we talked about was just taking a loan out. Withdrawing would be you're just taking everything out. You're not, of that, I believe 59 and a half age, so you're just taking all the money out. Then you have a 10% penalty for that, and then you're going to have to pay taxes on whatever else you pulled out as well. So it can be pretty expensive when you just withdraw the money. So definitely want to weigh your pros and cons before you go about doing that. The next would be withdrawing the funds from an IRA. So you can use up to $10,000 from a traditional IRA without the 10% early withdrawal penalty if you're a first-time home buyer. You're considered a first-time home buyer if you haven't owned a home in the past 2 years. For taxes on this one, the amount withdrawn is subject to income tax. And then if your spouse wants to pull out $10,000 as well, so if you and your spouse both have IRAs, you can each withdraw up to $10,000, so for a total of $20,000. So once again, just a nice chunk of money to be able to help you with that overall down payment amount if you're short or you're just looking for different places to put money into for the down payment. For the Roth IRA, as long as your Roth IRA has been open for at least 5 years, you can withdraw up to $10,000 of your earnings tax-free and penalty-free to buy your first home. Contributions, the money that you are putting in, can be withdrawn at any time without penalty. For the tax portion on the Roth IRA, since you already paid taxes on the contributions, you won't owe taxes at this time. So these are 3 good options to potentially look into if you're looking for some money for a down payment. Another item would be, say you have, an E-Trade account or a Robinhood account, looking into taking money from those to be able to use for money for a down payment and working, with each of those providers or services to be able to see what those fees would be. But definitely retirement accounts, like I mentioned, E-Trade, if you have Robinhood, one of those, say you've made some money on crypto and you want to use it to down payment of the house, are definitely some different types of options to think about when you're trying to save up for money for down payment to buy a home. All right, last and definitely not least would be to boost your savings. And I know you guys are like, James, yeah, and just right now, just be able to just save more money. But there's a few ways to be able to get some more money to help you out with your down payment. So one of them would be a tax refund. I know probably first half of the year, everyone's doing their taxes, and depending on how they have their withholdings at work or wherever you have it situated with your company, you could be getting a big lump sum back, from the government that you could use for a down payment. Instead of using that money to spend on clothes or cars or whatever that is, you're using that money that's going to a savings account. It's going to help you get to the goal of owning your home. Another way, just depositing money in the bank regularly. When I was on this journey, I put a certain amount of money from my paycheck straight to another account outside of Chase to be able to save to get to where I wanted to go. I know that can be hard. I wish the Rocket Money app was available back then. So this app that I've been using now it basically helps me budget, see how much I'm spending per month, see how much money's coming in per month, see if there's any charges that aren't mine. So I'm able to have a tighter budget and then use some of that money to be able to put into savings so I can spend that on a down payment moving forward. So wherever you're at with this, figuring out a way to budget and figure out a way to put at least whatever money that you can into a savings account every month so you're getting to your goal of saving and having enough for a down payment. Last would be a second job or side hustle. And I know some of us are working a lot. We don't have time for anything extra, but if this is a possibility for you, potentially looking to something that you can use money from that second job that is just going to a savings account or account that is keeping that money for you and you're not using it for anything else. It's just for money for a down payment. So whether it's driving Uber, whether it's actually getting a second job, whether that's selling different things in your house, whatever that side hustle might be, to help you get to your goal. And I think at these times, unless you have the money, you have an inheritance, or you have a home to sell, you have to get creative in the ways of saving up for a down payment, whether that's just saving, whether it's some of the options I went through before, or whether that's getting a second job. So if you have any questions about how much money is needed for a down payment for a particular house that you have and you want to work through that, I'd be happy to help. Please give me a call or email me with my information below. I hope you like this video. Please feel free to hit the like button if you do. Hit subscribe if you want more videos about just real estate facts, San Pedro, California, and more. Until next time, you guys, thank you. Ciao.